Good afternoon, ladies and gentlemen, and welcome to the Plant Healthcare PLC results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and will publish responses where it's appropriate to do so. Before we begin, as usual, we'd like to submit the following poll, and if you could give that your kind attention, I'm sure that'd be most appreciated by the company. And I'd like to hand over to CEO Chris Richards. Good afternoon, Chris.
Good afternoon, Mark. Thank you for that, and thank you everybody for joining Plant Healthcare 2021 results presentation. However, we made another announcement this morning, and I would like to start off by celebrating the appointment, or the nomination, I should say, of Jeff TWEEDY to succeed me as CEO of Plant Healthcare. And Jeff TWEEDY and Jeff Hovey, our CFO, are joining us today on the webinar, and they're there in the office in Raleigh, North Carolina, whereas I'm in London. So Jeff TWEEDY, I am really excited about this change of leadership. Jeff, I've known for some time. He's thoroughly experienced. He did very important roles in Syngenta, in Arista Life Science, and then later in the biological sector with Horizon Ag. We were very fortunate to hire Jeff in 2015, initially as the North America commercial head. He then took on more responsibility, global commercial, and finally as COO and an executive director from 2019. And frankly, Jeff has been doing most of the operational running of the company for the last 12 months or so. So it's been, so far as I'm concerned, a seamless transition from myself to Jeff, and I'm really excited about that. I, however, was asked by the board to stay around as non-executive chairman. I'm very, very pleased to do that. I'm a shareholder in the company. I want it to be really successful. And I want to be around to support both Jeff TWEEDY and the rest of the team where I can add value, and particularly around corporate development and investor relations. But to be absolutely clear, from the end of the AGM on the 22nd of June, Jeff TWEEDY will be CEO and running the company. So Jeff, would you like to say a couple of words at this point?
Sure. Thank you, Chris, and really appreciate the opportunity. This is a great situation to walk into. Chris has been a fantastic leader for the company over the past 5 years that I've been here, and really reshaped the organization in 2018, which has put us on the path that we're on to today. So I'm walking into a great situation with a great team that he built, and really looking forward to continuing the success of the company and staying on the growth trajectory that we're on currently. Thank you, Chris.
Great, Jeff. Appreciate that. And investors, you'll be hearing a lot from Jeff TWEEDY during the course of this webinar. Just as a quick reminder for everybody, who is Plant Healthcare? We're here to help farmers grow more food, but to do it more sustainably. And the award of the LSE's Green Economy Mark last year was a very important milestone for us in third-party endorsement of our sustainability credentials. So we develop and sell proprietary products. They're all derived from natural proteins, and they help protect crops from disease and stress, and they result in greater yield, quality, and so that the growers make more money. We've set ourselves an ambitious target, and we'll tell you a bit more about that later, to reach and exceed $30 million of sales in 2025. And I hope by the time you finish this webinar, you'll be pretty convinced that we're on a good track to achieve that target. As always, I'd like people to think about us as a company in two halves, if you like, with our existing commercial business, with HARPIN Alpha Beta, which Jeff TWEEDY will tell you more about later. HARPIN Alpha Beta sales grew 55% last year, and they continue to grow really well as product adoption accelerates. It's a healthy gross margin at 70%, and we're increasing our market reach. Most recently, we announced entering a very important market of Argentina. And what is really important is that we are tracking all the time our in-market sales growth, and you'll hear more about that later as the repeatable sales grow in each of our major markets. And Jeff will tell you a bit more about how 2022 is going. We've got off to a really strong start in 2022, supported by very strong ag market fundamentals. And then on the other side, our new technology, our PRETEC technology, which we call vaccines for plants, which is a massively important new technology, which we have developed over the last 8 years. We've invested more than $25 million in this, and we made our first launch in 2021 in Brazil. And that Saori product in Brazil, we see as having a potential of $10 million sales ex plant healthcare. But it's not the only product coming out of the PRETEC platform. We plan to do at least one major launch every year from the PRETEC platform. And all of these products are offering outstanding benefits to growers, yield increase and tremendous return on investment for growers. And a big part of our success has been partnership with major distributors around the world who are choosing to work with plant healthcare because of the quality of our products and the quality of our management. So that's who we are as a company. We are in the sector of sustainable agriculture, which is really, really important. As I think everybody recognizes, the world needs more food. And with the tragic events upholding in Ukraine, I think everybody has been sensitized to the relatively tight supply-demand balance of food around the world. Sadly, the inability of Ukraine to export grain is going to lead to, at the very least, significant food inflation for those products and could lead to major problems in some poorer countries. We need food. And at the same time, farming is getting harder with climate change, deforestation, more drought, wildfires. All of these factors makes farming harder. And at the same time, the world doesn't want to use more and more chemicals. And that's why biological products are so important. These products are less toxic than traditional ways of controlling problems. They're safer to the environment, safer to users. They're inspired by nature, and they help to protect crops from these factors that I mentioned, the drought, from disease, pests. And they also, and this is important right now, they help make better use of fertilizers. Fertilizers are currently in short supply for the same Ukraine invasion reasons. So the biological products have many advantages. They're also cheaper and quicker to bring to market. We've spent $25 million developing a whole platform. We brought the first product to market in 7 years. By the standard of agriculture, that's pretty quick. And all of these things are driving the market to grow fast. So the market for biological solutions is increasing at more than 16% per annum. So we as a company have positioned ourselves very much in the area of sustainability because it makes sense from a sustainability point of view, but it also makes sense from an economic point of view. The last slide that I will present before handing over to Jeff Tweedy is just a little reminder about what our products are and how they work. First of all, on the right-hand side of this chart, how are they used? They can be applied both to the leaves of plants, what we call foliar applications, or to the seeds, to seed treatment, as a seed treatment. So either of those approaches work. And on the left-hand side here with HARPIN alpha beta, this is a technology which is based on naturally occurring proteins. It's very environmentally friendly, doesn't kill anything, it just makes plants healthier, better able to resist disease and stress. And as Jeff Tweedy will tell you more about, we're getting really good return on investments for growers. And on the other hand, the PRETEC platform, the vaccines for plants, This is a disruptive technology. This is taking proteins, dividing them into their component parts, these little peptides. You hear about peptides in pharmaceuticals in particular. Now we're extending that technology into agriculture. Very, very exciting technology. It's proprietary. We've more than 50 patents filed. The first one's now been issued. And one of the things that takes us to market faster is fast-track regulatory status. So in Brazil, our product Saori, it only took 1 year to get registration. Chemicals take 3, 4, 5, or even 6 years to be registered. So I will stop there at that point, and I'll pass, if I may, to Jeff Tweedy to take you through.
Why is this?
All right, Jeff Harvey, why don't you change the slide? There we go. Jeff Tweedy, there you go.
Thank you, Chris. As Chris mentioned, 2021 was a really strong year for growth for HARPIN Alpha Beta, and that was really driven by our global distribution strategy that we have. We've taken a much different approach than other companies in this space, and I'll walk you through who those partners are. We really align with very large distributors, exclusive arrangements that give us broad market access to specialty and row crop markets. And what we saw this year, when we look at in-market growth, these are our on-ground sales. In sugarcane, we were up over 100%, specialty crops up 116%, and then in U.S. corn up 55%. And what's really important around this is that these are repeatable sales, as Chris mentioned earlier. And that's why it's important to work with large distribution. You have visibility of their inventory, but we also know who they're selling to year-over-year basis, which is critical to help us with continued growth. So who are these distributors? In the U.S., we work with Wilbur Ellis in the specialty market. We've had an exclusive relationship with them since 2019. We also have another distributor in the U.S. It's confidential who we work with, but they're the second largest distributor in the U.S. With exclusive into the U.S. row crop markets for a seed treatment product. In Brazil, we have an exclusive relationship with Coplacana since 2018. Coplacana is based mainly in São Paulo State, and they have access to over 5 million hectares of sugarcane hectares within that state. We just recently added in 2021 a UK distributor named Agri, and this is really for the UK crops focused on potatoes, the specialty market of grapes, and then also the amenity market for professional turf. And that agreement will also allow us to expand into other countries where Agri has presence once we get registrations. And recently we just added a company in Argentina, Ager is their name. This is exclusive for soy and wheat. And I'll talk a little bit more about that, but it really is our first entrance into the Argentine market. That will happen second half of this year. And we're really excited about that to further expand the HARPIN presence into soybeans. Next slide. So how are we feeling about 2022 and what gives us confidence? I think there's really 4 things that are going on in the market. As Chris mentioned, there's strong demand for crops, for the grain crops, lifted by prices in 2021. Further crop commodity pricing has happened because of the invasion into Ukraine. So commodity crops are at an all-time high right now. Fertilizer prices are extremely high, and in some areas, fertilizer is very difficult to get. And so growers are looking to, if they don't have enough or they're looking to cut back on fertilizer, they're looking for ways to increase yield. That really positions well with what we've done with HARPIN over the last couple of years as increasing yield in these row crops. So we're seeing significant interest in HARPIN as a replacement to help with driving the yield, because the growers going for yield this year given the commodity prices. And then the last, we're well positioned with HARPIN Alpha Beta stock. We have good supply. We had a good plan coming out of 2021 to make sure that not only do we deliver any base but upsides in 2022, and then be well positioned for the 2023 season. Just touching briefly on the U.S. market, specialty crops. Currently, we're focused on grapes, citrus, apples, and pears, and we expect significant growth in California. California is seeing a drought this year. However, the crops that we're in are more in the irrigated, so we're a bit more insulated from the downsides that are happening in California. We feel very good about HARPIN growth this year, and we're planning in the specialty crops. Once we receive registration for PHC 279, we will launch into the specialty market likely in the fourth quarter of this year with our partner Wilbur Ellis. On the row crops, as I mentioned earlier, HARPIN alpha beta has really been proven to yield increase, and we're now on almost 1% of the corn acres and growing. The crop this year is off to a slow start due to weather. However, as we look at our monthly year-over-year sales, our sales are actually ahead of last year on less planted acres. So that's a good signal for the coming season, and hopefully weather will cooperate where growers will get the crop in here shortly. And we are planning on extending HARPIN into soybeans, which is over a 90 million acre crop. And we have plans for future products to drive adoption in these row crops with our partner for corn and soybeans. When we look at Brazil sugarcane, 2021 was a really difficult year in sugarcane due to the drought, just severe drought. Planting and harvests were delayed. However, the benefit that we saw from HARPIN alpha beta, if you look at the bottom right, the treated is on the right, the untreated is on the left. Significant growth of the sugarcane, which is from the HARPIN alpha beta treatment. We typically will see that the more stress, the better, the greater the difference that you will see. So coming out of that, we've seen much better growth coming into 2022. Our first quarter sales was better than 2021, and it looks like it's returning to a more normal type of growth pattern with strong support and repeatable sales with our partners in sugarcane. Next, I want to turn to this new agreement that we've done in Argentina. It's a significant market opportunity. Argentina is the world's third largest producer of soybeans. Our partner has access to more than 3 million hectares, and we have sales planned first sales will be in soybeans with plans to expand into wheat when we add those crops to the label. It is a 5-year agreement with a target of over 250,000 hectares, and our first year sales will be in the second half of this year. And there is an opportunity to expand into Uruguay. We would need to receive those registrations, but our partner already has a business there, so there's incremental opportunities working with Ager. The product will be sold as PROACT, will be the brand name as a seed treatment. The 4 years worth of field trials that we've done showed an increase of 5% on soybeans, especially when they've been exposed to drought. And we're targeting over 1 million sales ex PHC by 2027. Just a bit of an update on Brazil. On the next slide, PRETEC, we had Saori, which is the brand name, was introduced by Nutrien this past growing season. And again, this is the second largest market in the world. Soybeans, 38 million hectares, and fungicides is huge. It's $2.5 billion market used for control of Asian soy rust. Nutrien is the world's largest distributor. They've made a significant investment in Brazil, and we've had excellent results from over 300 demonstration trials in 2021. And 2022, Nutrien is targeting over 150,000 hectares of treated seed. That would be 20% of their seed business. That's a lot for a first year. Typically, treated seed for a new product would be anywhere from 10 to 15%. So they've got a major launch underway right now that's going on with their field reps. And then the planting will begin in late third quarter, fourth quarter of this season. What did we see this year? Brazil really saw a major drought. It's very significant. And what we saw from soy really protects the seed against disease, but also drought. We saw an average of 9% yield increase, which was better than we'd seen in previous years. To a grower, that's worth $200 a hectare. And with commodity prices where they are today, that's significant. We do have a low-cost supplier that we announced early in the year that will be in Europe, and we've secured that manufacturing to move forward to cover all our forecasts moving forward. We see this as a significant opportunity. We believe sales will be north of 10 million by 2025 ex-PHC. So that's where we've been. Where are we going? So our next plan is to launch PHC 279, which is the same active as Sori, into the disease market for specialty crops in the U.S. We are anticipating registration of third quarter this year. And then by the time we receive our state registrations, we'd be able to launch into the market at the end of 2022 for the 2023 season. And this is with our partner, Wilbur Ellis. We announced earlier that we submitted registration in January this year for our new active ingredient, PHC 949. This is a nematicide. We expect registration sometime third quarter of 2023 with a launch at the end of 2023 into 2024. I'm very excited about this active. We've seen very good results on nematode, either foliar or as a seed treatment, and as good as the traditional chemistries that are on the market today. Also with PHC 279 in Brazil, we want to expand our markets. So our next target market would be disease control in coffee. Plan would be to submit at the end of this year with a registration plan achieved by the end of 23 and a launch of 2024. We also want to submit the nematode product in Brazil, probably late second quarter this year, with a planned registration at the end of 23 and a launch of 24. And then lastly, we're looking at the PRETEC technology in the UK market. It would be mixed with a fertilizer, and assuming that those results are favorable this year, a plan would be is to launch that product in the 2023 season for use in potatoes. So just in summary, before I turn it over to Jeff Hovey, we're on track to deliver our targets, and that's going to be driven by a couple of things. First of all, continued HARPIN growth in corn, U.S. specialty crops, sugarcane, Argentina, and then in Europe, Mexico, and other countries in South America. We want to broaden our launches of Sori and PHC 279 in the U.S. in 2022 and 23, and really help us with PRETEC achieve targets of $5 to $10 million per annum. We also have midterm targets to achieve cash positive by 2024 or earlier. I think we're on track for that. We want to match our peer group of 25 to 30% EBITDA to sales ratio, and we believe that there will be opportunities for sector consolidation. There are a lot of small companies in this market. They do not have the market access that we have, and we believe that puts us in a unique position to be good partners and to really build out a strong biologicals business. So on the right, these are our aspirations where we're headed, and we're feeling very good about where we're at in 2022 and look forward to reporting those results in July. Jeff?
Okay. Thanks, Jeff. This slide, I'll talk about high level, our financial and operations for 21, and then I'll go into a little more detail in the following slides. So our revenue for 2021 was 8.4, which was a 28% increase over last year, or 24% in constant currency. Our gross margin was up 3% from 56% in 2020. Our operating cash burn was 3.2, which is 27% above 2020 levels as we increased our investment in PRETEC product launches, as well as continuing to put resources into growing the commercial business. Our cash at the end of 2021 was $9.2 million. I'm happy to say that our commercial business achieved an EBITDA of approximately $400,000 and generated cash as well for the year. Turning to operations, as Chris and Jeff have both said, our HARPIN revenue for 2021 was $6 million, which represented a 55% increase, and our HARPIN gross margin increased to 70%. We have strengthened our market access by partnering and selling with the 4 top global distributors. And from a PRETEC platform perspective, as Jeff said, we've been able to secure low-cost production. We've launched soy into Brazil, which is a $500 million market, and we have major U.S. launches that are on track for 22 and 23. Turning to the P&L, as I said, our revenue was 8.4, or 28% increase. All regions, with the exception of Mexico, were up. Mexico was held back by reduced export for the fruit and vegetable markets, as well as reduced plantings. The sugarcane market was up 2x over 2020. North America was up almost 70% at 67%, and EMEA was up 31%. As I said, the HARPIN revenue increased 55%. In this particular category, all regions were up. Americas, which we define as Brazil and North America, was up an impressive 73%. EMEA was up 42%, and Mexico was up 15%. Our operating expenses increased 36% up to $9.6 million. As I said, this was mainly due to the increase in spend to drive the commercial business as well as the PRETEC launches. So our adjusted EBITDA was $4.6 million, driven by these increased operating costs offset by the higher gross margin that we received. Our operating loss for the year was around $6.4 million, most of that driven by our translational losses that we incur, which is driven by our intercompany sterling loans. Looking at the bottom right, this graph represents HARPIN revenue between 2019 and 2021, which represents a 30% CAGR. Once again, all regions globally were up at double digits, with the Americas leading the way. Turning to the balance sheet, inventory has progressively been reduced over the last 18 months. This is driven by the increased consumption, but more importantly, our management's commitment to reducing our inventory levels. And HARPIN inventory level at the end of 21 was at historic lows, and we expect these inventory levels to continue to normalize in the future years. Receivables increased $600,000 from 2020. This is due to fourth quarter sales. Our sales are typically weighted more towards the second half of the year, anywhere from around 60% in the second half, with the balance being the first half, which translates into higher first quarter collections for us in the following year. I'm also happy to say that our DSOs have improved 40 days from the beginning of the year, as we have created exceptional distribution relationships, not only with our existing customers, with new customers, and establishing favorable terms. In addition, our working capital decreased $1.1 million, or 22%, from 2020. Most of that is driven by the reduction of inventory. We've raised $9.1 million net of costs in March of 2021. As I said, our cash at the end of the year was 9.2, and our cash burn was 4.1. Finally, borrowings of 1.1. Most of that is the effects of IFRS requiring us to put all leases on the balance sheet. If you exclude the effects of IFRS 16, our debt position at the end of 21 was around $150,000.
So thank you, Jeff. Just to wrap up then, in summary, plant healthcare represents a tremendous opportunity in sustainability. we believe we're well on track to deliver our $30 million plus sales target in 25 because we have very effective proven products. We have unrivaled market access. We've delivered the low cost of goods, which will ensure that our margins are good. We're harvesting a 25 million plus investment in PRETEC with major launches planned every year. And we're just reporting today a strong performance in 2021, and particularly around HARPIN revenue growth of 55%. And we look after our shareholders' cash with that working capital reduction. We're delighted to say that 2022 has got off to a good start, and it remains our plan to achieve cash positive within our existing reserves. So, Mark, those are the slides we were planning to go through on this occasion. Maybe we can open up for questions. So if I...
That's great. Sorry, Chris, my apologies. I realised I did the old-fashioned thing and put myself on mute, but there we go. But thank you very much indeed to both the Jeffs and to Chris for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But as well, the company take a few moments to review your questions submitted already. I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. Chris, as you can rightly see for yourself, a number of questions have been pre-submitted, which I've put onto the panel for you, along with a number of questions from investors submitted throughout today's meeting. So if I may just hand back to you, Chris, if you could read out those questions and give a response, and then I'll pick up from you at the end.
Perfect. Thank you, Mark. And I'm relieved that it's not only me that forgets to put the technical button off. So a really good question coming in. I've got a little bit of an echo. I hope you can hear me okay. The first one I'd like to pick out is a pre-submitted question. How easily are you able to ramp up production to meet any potential increases in demand? Jeff Tweedy, that sounds like yours.
Thanks, Chris. I would say, in short, we're in great shape. I think we had good plans in place a year ago with upsides we built in, and our 2022 demands are well covered and into 2023.
Thanks, Jeff. The next one, also pre-submitted, post-year end, has there been a significant increase in demand for your products because of the shortages of fertilizer and the spike in fertilizer prices? I think you made a reference to that in one of your slides, Jeff, but maybe you could build on that a little.
Yeah, when we look at 2022, that slide that mentions how things are going in 2022, what we're seeing is growers are having limited access to fertilizer, or in some cases just cutting back, but they are looking for alternatives to increase yield. I think we're well positioned there. Our partners have been positioning HARPIN for yield enhancement for a number of years, and I think there's a lot of interest from growers that are looking to hit these yield targets with the high commodity prices. So feel very good about that, and there seems to be strong demand currently for HARPIN in those crops.
Thanks, Jeff. I'm going to take the next one myself to give Jeff Tweedy's voice a rest. Another pre-submitted question. Repeat custom should be a major factor in sustained sales growth. Will you be sharing any commentary on this metric with investors? Well, we do share from time to time in-market sales growth numbers. And for example, in this presentation, we shared the numbers for sugarcane. And those are the sales by our distributor, Coplacana, month by month on an LTM basis in sugarcane. Now, we do have some additional data which demonstrate it's not just a different farmer every time. But I think just that speed of growth, that consistent growth of sales data, in-market sales, is really indicative. And we do intend, when we have space in the presentations, to share more of those. We have the same data for all of our major distributors. We get regular updates from our distributors on how much they are selling. I think it's a really important metric that we follow. I'm just going to give you one very small anecdote because I think anecdote tells you a lot. I have a friend in the US who's a 5th generation Iowa corn farmer on a big scale. He was a big skeptic when I told him about HARPIN in corn. But he said, as a favor to you, I'll try it, Chris. And he tried the seed treatment with HARPIN on alternate runs of the planter. And then he was really, really surprised when he monitored that crop and found that there was greater photosynthetic activity. In other words, the crop was growing stronger and faster in those rows which he treated with HARPIN. I caught up with him recently and I said, what's your plan for this year? And he said, this year, especially with fertilizer prices, especially with this cold weather, I'm going to use HARPIN on 30% of my corn. So that's a big jump from 0 and somebody who didn't believe in this type of product to 30% is really very promising. So we do get repeat custom and we do attempt to monitor that. Next one, another pre-submitted question. Is PROACT still made in China? If so, can it be manufactured elsewhere in the event of sanctions? TWEEDY, I think that's one for you, sir.
Yep. Yes, it is currently manufactured today. However, we are exploring options on manufacturing in other locations, and one logical location would be where we currently manufacture Saori, not only because it's a very good partner, but also it gives us some synergies there and ability to leverage additional price improvements. So we are exploring that and hope to have some answers on that shortly.
Great, thanks, Jeff. Now there's a question here from Roger F. You referenced the current dry weather in North America. If these conditions persist, Jeff Tweedy, how do you see the dry weather affecting your sales?
Yeah, the dry weather that I referenced is really around the West Coast market and the specialty crops, mainly California. They've had significant issues there this year. We feel very well insulated from that because HARPIN is going on almonds and grapes, and those grapes are typically irrigated and really are not affected by the drought because they have ample water supply. So there are a number of products that are affected. We're not seeing the impact of that at the current time and don't expect any.
Thanks, Jeff. And then Roger F. asks a similar question, but another part of the world. He says, many parts of the River Plate area in Argentina, Uruguay, had drought conditions in the early months of the year, which impacted soy production. Were the areas you sold Saori in Brazil also affected by the drought? And if so, did that affect your sales?
Yep, in Saori for Brazil, in this past year, we did see significant drought, and we really had a test market going on with limited supply in 2021. We saw significant yield increase, over 9% yield increase where Saori was applied. So under those severe drought conditions, we saw much greater differences in yield, and I think that's why there's excitement from Nutrien and the growers to apply Saori on what I would call a higher percentage of soybeans year one on a full-scale launch. So we'll treat somewhere around 20% of the seed that Nutrien, their branded seed, this year in a first-year launch. And I think that's a really positive sign from the results coming out of 2021.
Thanks for that, Jeff. There's a next question I'm going to take myself, actually, just to give Jeff a rest. From Mark F. He asks, very interesting question. Could diseases or pests become immune to our PRETEC vaccines for plants? Do the products need tweaking occasionally, like human vaccines? And the answer to that is that the science says probably not. And because of the way these products work, because you're dealing with the intrinsic metabolic mechanisms of the plants. However, I've been a scientist long enough to realize that scientists do get it wrong. And we do actually within our PRETEC platform have the ability to tweak the products as you say. So if needs be, we will go back and we will do that and create more intellectual property in that area. So we will definitely keep an eye on that, but we don't anticipate that to be an issue in at least the medium term. But it's a most interesting question. So Roger F. comes back in here and asks a question for Mr. Hovey. Jeff, what insight can you give us into the growth of admin expenses?
Question. I mean, from the start of my tenure with Plant Healthcare, I'm a firm believer in keeping our admin expenses as low as possible. So with that being said, I'd rather see our money being spent into the commercial business, going to commercial business, as well as expanding on the PRETEC pipeline. So like I said, I try to keep our admin expenses as low as possible, and we project that into the future as well.
Thanks, Jeff. Here's another question, absolutely for Jeff Tweedy. Douglas P. asks, is there any data being developed or anecdotal around the use of HARPIN for citrus greening disease? That's a great one for you, Jeff.
Yeah, we actually, the question is timely. We've actually got quite a bit of HARPIN going on citrus in Florida this year. There was some testing that was done by our partner Wilbur Ellis last year, and what they saw is a reduction in drop of the fruit. And so I think we've seen some uptake this year and some new uses that we hadn't seen in the past. Is it a complete answer? No, it's not a complete answer, but I think it is a tool for a grower to use to really keep the crop on the tree longer and allow them to harvest versus a significant drop, fruit drop that would be seen.
Thanks, Jeff. And another question for you, Jeff, from David D. What are the key differences between HARPIN and PRETEC, and do they compete against each other at any level?
Yeah, I think about HARPIN as more of a yield type enhancing with some nematode activity, but it's more of a suppression type of product that we see, and also we see improved quality of fruit. So, for example, we see more calcium in citrus. As an example, there was a paper that was done. We won an award on that, which helps with longer shelf life. PRETEC is more specific. So PHC 279 would be very targeted towards disease control, as opposed to PHC 949, which is a nematode product. So think of them as very specific targets for either a nematode or certain diseases that a grower would have. So I do not see them competing specifically with each other. There might be some overlap in some crops, but Soria, as an example, would be a brand new market for us as a seed treatment, and the claims that we'd make around Soria are completely different than what we would make around HARPIN alpha beta.
Thanks for that, Jeff. Now I'm going to pick up a couple of questions here. There are two related ones. One from Mark F. Despite progress and huge potential, shares in Plant Healthcare are thinly traded and undervalued. Why isn't there more interest? And then Matthew R. says, the company's making substantial progress, but the share price isn't. I'm sure this is a frustration to you. How do you protect yourself from corporate interest at potential low levels? And absolutely, I think, first of all, we share your frustration. And it's really important in this company that we as executives are very strongly aligned with shareholder interests. Both the Jeffs and myself, we put our own money in our pocket to invest in the company. So we have that interest. But in addition, we all have long-term incentive plans, which have vesting schedules, which only vest at much higher share prices than we have today. So first point is our frustration is the same as yours, and our incentives are the same as yours. What we are I think there's a bit of history in here that plant healthcare has been around for a while, and it has taken us a long time to reposition HARPIN and to invest in and start to deliver PRETEC products. And I think we've become a little bit of a show me company. And I think we're now beginning to show investors what we're doing, that we're doing the right things and that we're making progress. And in 2021, and we are determined to do so again in 2022. And frankly, it's up to us to deliver that first-class operational performance and the growth that we've talked about today. And we take that obligation really seriously, and we fully intend to deliver it. We also work a little bit more on investor relations than we have done historically. For example, doing these webinars, and our shareholder register is now significantly better balanced than it was 18 months ago, and we hope that will support us in parallel with our delivery. But going to the final point about the potential exposure that gives us to corporate interest at potential low levels. First of all, clearly shareholders will make the decision on what happens to the company, but be assured that the board will not recommend to shareholders an approach which we believe undervalues the company. So we will act always in the interests of shareholders, and it's our job to get as many people interested in this great company as we can, and increase the share price. And there's a related question here slightly from Andrew C, where he asks, are you able to say anything on recent corporate consolidation in the sector, and that he noticed the tie-up between Bioceres and Marrone Bioinnovations? Are there any negatives for plant healthcare as some competitors become larger companies? So Andrew, I think that's something that we think about a lot. And it is certainly true that there are many small companies in the sector. It's very, very fragmented. There are many that are much smaller than plant healthcare. There are a few that are significantly larger than plant healthcare. And scale does help. There's no doubt about it. And companies like Bioceres are very ambitious in the sector, in consolidation, and they were willing to pay 100% premium to the undisturbed share price of Marrone, which I think is an interesting parameter. So we keep tabs on this situation to evaluate opportunities for plant healthcare, either to lead or to be part of that consolidation. But we will only make a move if it's accretive to shareholder value, if it's in the interests of shareholders. And we modestly are convinced that we are significantly more advanced than many companies in this sector. Not many companies in the biological sector have the combination of benefits which are set out on this slide: proven products, terrific market access, we're chosen by big distributors, low cost of goods, so our margin structures are good. And I have to say, now that I'm stepping down as CEO, we have a great management team. We have a great executive team. So I do think we're very, very well positioned in a consolidating sector. So I'll pick up a couple more questions, if I may, and I'm conscious that time is going on here, but these are really good questions and I want to give them some airtime. Andrew C, it's a question for you, Jeff Tweedy. Are you able to say anything on whether there is interest from some of the large traditional ag companies for partnering with PHC 949 or other PRETEC products?
Yeah, it's a good question. I mean, we always evaluate those opportunities with the large ag companies. What I would say is that I think distribution has done a much better job of understanding the biological space and then driving technology in this space. If I use Nutrien as an example, we met with them a few months ago, and they said they evaluated over 200 companies in 2021. We were only 5 that they did a deal with. But what you're seeing from companies like Nutrien, Wilbur Ellis is an example too, is that they are accessing the technology. So they are looking for biological products. They want proprietary products. They want to put them in their portfolio. And I think the way that the market is moving, they're going to own the space before the majors figure it out. And I think they're very good at it. They understand how to sell it. And I think that's the best partner for us. And quite frankly, that's where we've had the best success. And I think we'll continue to move in that direction and look for additional partners that are distribution partners that can really leverage the technology and understand how to sell
it. Thanks, Jeff. Appreciate that. Roger F. Asked a question, which I'll take. Any comments you care to make about the reduction in holdings by Osprey? Yes, thank you for asking that question. I clearly stay, well, all 3 of us stay in close contact with Osprey. They're a very important shareholder. They did have 21.2% of the shares, and they reduced that by 3%. Now, clearly they did not consult us, but they talked to me about it at some length, and they explained their reasons, and they have said they're more than happy for me to explain their reasons to people who ask. First of all, when they had an approach from a London broker saying that there was a fund manager in London who had a small position and wanted to increase their exposure to plant healthcare. And they weighed it up, and they said, well, the main benefit of it is having a broader shareholder register, which is good for the stock. The main disadvantage is the perception that some shareholders may have that Osprey is maybe less excited about plant healthcare for one reason or another. And what Osprey assured me is that their stance opposite plant healthcare has not changed at all. If anything, they are more excited about plant healthcare than they were when they invested. They're very, very supportive, and they are encouraging us to continue to drive the performance of the company and to deliver the midterm growth that we believe is feasible. So that's the key message from Osprey to all of you guys. They continue to be very, very supportive of the company, but it is unarguable that it is better for the company to have a more balanced shareholder register. And when we post the slides, you will see that there's a final slide after this one, in fact, which shows the shareholder register or the highlights of the shareholder register. And we have a better balanced register than we've ever had, which I think should help to drive the share price in the midterm. Thank you, Mark, for putting that up there. So I think that's really, really helpful. There was a time, 3 years ago, when a single shareholder had 30%, and I think it's much better that we have a more balanced register. So I think we've got time for one more question, and I'd like to take a question from David D here, which is absolutely for Jeff Tweedy to close on. How does 2022 performance currently compare with 2021? And is it in line with the company's expectations? Mr. Tweedy.
Yeah, I think we're off to a very good start in 2022. We're feeling good about not only our on-ground sales, but orders that we have from customers and the excitement that we're seeing in the market. I think we're in line with expectations that have been set. And we look forward to publishing our numbers at the half and then sharing those with investors. But we're off to a very, very good start in 2022 and excited of where the full year will end.
That's great. Jeff, both Jeffs, in fact, and Chris, thank you very much indeed for updating investors this afternoon. Chris, I know that investor feedback is important to you and the rest of the team, and I'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, I wondered if I may, Chris, just ask you for a few closing comments to close up with.
Absolutely. Thank you, Mark, and thank you, everybody, for your attention. I think the announcement we made this morning on the 2021 results and just a flavor for 2022 demonstrates that Plant Healthcare continues to perform extremely strongly. Excuse me. and we do anticipate at least performing in line with expectations this year and with achieving our ambitious 2025 target. We're doing the right thing for shareholders. I believe we're doing the right thing for the planet with our focus on sustainability. So our tails are up. We're a confident team. We're motoring in the right direction. And particularly on the executive side, I'm really excited that my job is going to be to make Jeff Tweedy and Jeff Hovey and the executive team as highly successful when Jeff Tweedy steps into my post as CEO from June the 22nd. And thank you for a couple of nice comments to that effect, which were posted as well. Congratulations to Jeff Tweedy on your appointment. And I look forward to great success in the future. Thank you, everybody.
That's great. Chris, Jeff, and Jeff, thank you very much once again for updating investors. Can I please ask investors not to close this session, as I'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Plant Healthcare PLC, would like to thank you for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant afternoon.